What does Cherif's crystal ball say on where the interest rates will be in 6 to 12 months? Well, Sandeep is asking how deep, okay, or shallow of a recession we will see, and the impact of all this on home prices, especially San Francisco Bay Area, where technology layoffs are becoming rather meaningful. Between Twitter and Facebook, Facebook laid off 11,000 people. What does all this mean for commercial investors looking for opportunities? I am already planning some things like on January calls where I'm going to share with you the beautiful opportunities with the mortgage notes, which we used to teach back in 2009. By the way, I made my most money in 1991 when the economy, there was the Gulf War, 1991. And then again in 2001. And then again when in 2007, 8, 9, when the economy was a disaster. It means wonderful things. Let me tell you, I don't have a crystal ball, but the thing is, I mean, let's go by what the Fed are saying. They're saying we're gonna keep increasing interest rate until we don't care what happens. I mean, it's not exactly verbatim, that's what it said. They say, at any cost, we're gonna keep increasing the interest rate until we curb inflation. Inflation is the devaluation of the dollar. That means you need, because everything, there was so much demand. So they will increase it. This is for sure. At least 2 more times. What is this going to do? Is going to make the people panic, the investors. There is no more flipping. There is no wholesaling is getting harder. Holding properties, all those that were real estate fund managers, or I should call them syndicators. A syndication is one deal where they raise money for it, usually apartment buildings. A lot of young guys have been like gurus of, coming with the baseball cap and saying, I have so many buildings. Well, some are really good and some are not good. Actually, I was just having a meeting today, and maybe Fernando's on the call, I think so. And we were talking about that, and some are not so good. And what's going to happen is they took these teaser rates at 3.5% and 4%, and their plan was in 2 years, we're going to refinance, and we're going to actually start paying not just interest only, but interest and more and principal. And now they can do that. As soon as it becomes principal and interest, and the interest rate changes, they're going to say, we can't make it. We can't pay the investors. So it's going to be a bloodbath in many markets. But you're asking for opportunities. You're saying this bloodbath for those who, you see, when people get too confident, they become very specific and very narrow in their thinking. So they go into just one asset class or one location and just load up. What ends up happening is when the market shifts, they have nothing to do. They don't know where to go. So this creates opportunities for you. Now, I don't like to go and beat somebody who is down, but these people are going to lose the properties. And that's where deals can come in. And that's where creative financing is going to be king. There will be, I am already planning some things like on January calls where I'm going to share with you the beautiful opportunities with the mortgage notes, which we used to teach back in 2009. By the way, I made my most money in 1991 when the economy, there was the Gulf War, 1991. And then again in 2001, when in March, the stock market crashed. And then in September, God forbid, the September 11th attack happened. And then again, when in 2007, 8, 9, when the economy was a disaster. If many of you have tracked me for many years, I used to buy in bulk from the banks, pennies on the dollars. We used to create notes, sell the properties on financing, and discount the notes and sell them. Students were getting cash flow. It's unbelievable. I'm going to talk about that because the opportunities are coming. I just don't think, since you're asking about my crystal ball, I don't think the economy is going to collapse that much. People put huge down payments. The banks have been asking for people to qualify. The Fed is going to realize as soon as they get up to the 8 and 9, where you realize the slowdown is going to be tremendous. So by summertime, they're going to have to pull it back. They're going to say, okay, we're going to stay flat, and they're going to stay flat for a while, and then they're going to start dropping it again because they always overreact in either direction. So be on the lookout for good deals. San Francisco, like any other market, is going to be affected. It's just a little bit different when you're over $5 million on homes because the buyers are not the weak buyers. 40% of the deals that I've sold in my MIXIF fund and SFI fund have been done in cash. We've sold 40, like the buyer if two buyers coming in and we know they're serious, one of them is going to be cash. That's San Francisco, okay? That's why we've been there since the 90s. That's why the fund focuses, I mean, we have like a portfolio of about $90 million of properties there now, 6 properties that are home runs. So I would say be on the lookout, not just in San Francisco, but nationwide. Keep looking at deals. If you see something, that you will start seeing things like motivated seller, must sell, bring offers. And I'm talking commercial now, commercial residential. The most important thing you look at is what's the existing financing, what's happening, not with that borrower, what's happening with the bank, what's happening with the bank. Because you will find some borrowers that have locked in a low interest rate, but they got other problems with other deals, and that other deal has bad financing, but it's not gonna sell, so they will sell to you the property that's performing with locked in low interest rate. So they can save them so they don't lose everything. Because they're gonna lose this one and then it's gonna trigger a loss on this one because the banks had asked before for personal guarantees. And when the banks didn't ask for personal guarantees, they asked for cross collateral. And when the bank said, we don't want personal guarantee and we don't want the cross collateral, that was because there was enough money coming into the deal and now they're gonna lose that equity. That's the bloodbath I'm talking about. I, on the other hand, I wanna position myself differently here because you have heard me before. I have been waiting for the market to change. I am diversified by market, San Francisco, Old San Juan, Puerto Rico. Old San Juan is doing very well, by the way. It's unbelievable. Google it and see. Diversified by location. I'm diversified by type of assets. Luxury residential rehab, mixed use commercial cash flow. Diversified by style of investing. Buy, add square footage, rehab, improve and sell these luxury homes. Buy, reposition and hold these commercial properties. So when somebody focuses too much, the market changes is hard. When somebody's diversified wisely and walks their way to wealth, they can last longer. And still what I tell you, and I'm on the lookout and I'm on the phone and you can ask Ashley and we discuss numbers and all day long I look at numbers to make sure, okay, this moving this way, this moving this way. And lenders that do construction loans are not as flexible as before, but we've been doing rehab for a while, so we know our numbers. We have a lot of margin of safety. We have reserves. So we're completely different position. We are positioned to take those opportunities. So Sandeep, there will be some deep opportunities, my friend. Keep on the lookout and let's make some things happen.